How you doing, everybody? I'm like always so close to the camera. It's like, hello. Crazy. All right, we're gonna get started here in just a second. Now, my wife might pop in with bringing me a cup of coffee. I just swung open the office door. Was like, hey, can I have a cup of coffee? So she might be popping in here in just a second. All right, so I'm going to do a live Facebook thing too here. So please bear with me as I get everything set up. This is going to be an unusual webinar tonight. Boy, oh, here we go. Oh, that's what I'm calling it. This is what it is. It's just what it is. Okay, I know I can't push it down. There you go. Go like that. There we go. Get rid of some of this other stuff. No. There we go. All right. We're going to get started here in just a second. You can join me on the webinar. You could be in here as well. Let me see if I put a link in the webinar in the room there for Facebook. If I can actually see. There we go. Let me do an invite. Copy URL. Head over to the Facebook Live area. And let's see, what do I want to say? Comments. There it is. That's the webinar link. Join me there if you want to. And you can ask questions. You can do all kinds of stuff in there. I'm going to minimize the Facebook side. And then we're going to do a share screen, whiteboard screen real quick. Now, what's this all about tonight? Everybody's going to kind of want to know. Again, if you're part of my Facebook Live friends clubs from karate and all those other kind of things, completely ignore any of this. Unless you do want to know more, then you can contact me whenever, right? Just whatever I can do for you to help you. But if you're watching this and you're part of our Forex Frenzy Club or many of our other groups that we have, be prepared. Tonight is going to be a crazy night. We're actually going to show you a lot of cool things. And we're going to use some of our tools and some of the trading prowess. And I'm going to start showing you some stuff about trading with our new Dex, our Dex Bol, I guess you would call it Dex Bol, for Nadex and a few other things too that you could trade with. Normally you trade it on Forex, but we can probably use the system to trade on Nadex as well. And I'll even show you how to trade with that. For all of you that are following along, what tools would you need would be your MetaTrader 4s if you want to have them open, if you want to just take notes or whatever, sit back and relax, just watch me trade, watch me do some stuff. The compromise here is that you're going to see a lot of things. You might feel overwhelmed. You might be like, you might have to watch this video 2 or 3 times. You might not know where this video is at. You know, it's either here, I'm going to be on Facebook, or it's going to be on my YouTube channel, or it'll be on my website. Or if you just want to really just listen, we're going to give you a lot of information for free tonight and about how to trade and how to do a lot of stuff. So please bear with me. We're going to be doing some switching back and forth on a few things. So you see me mess up at all, I apologize now. Before we get started with the tools, let me talk about just a little bit, a tiny bit about mentality. Okay. First and foremost, and everybody kind of puts their own spin on this next statement. Less is more. That's all I got for you. Less is more. Waiting for the perfect time to trade. Waiting for the perfect signal. Having your strategy. Knowing when to physically get into the trade by following the rules of whatever strategy you're following. Now, I have this theory that any strategy can work as long as you work the strategy. I always hate when people did that, you know, flip the stuff around, you know, Any sneakers can work as long as your sneakers work, whatever, but in your case here, if you're learning how to trade, if you're learning how to just start out, following a strategy, following a process, let's just pretend that we're in a strategy that physically works. Let's just pretend, like I have to pretend this system does work. It's pretty cool, actually. There's my lovely wife. Thank you very much, Erica. I appreciate it. And I got coffee. I'm going to pay the price of that one. I'll probably have to wash the car or something. It's been a long day. All right. So using your discipline and a few other things, we're going to make some things happen. Now, before we jump into the tools and all that stuff, we talk a little bit about mentality. Another one is the equation that some of you see. You see this a lot on my website. You see this a lot when I teach CVG, consistency plus volume equals goal. But a lot of you have a hard time trying to figure out what consistency is. Consistency is patience and discipline. And patience being waiting for the right thing to happen, and discipline doing the right thing when it does. When you do that and you are consistently above board and you've made your money, you're plus positive, okay? Then that's consistency. That's what this whole thing is here, okay? And you can't move on. You can't start just throwing money at a bad strategy is bad money. Throwing money at a weak disposition or a weak consistent value, or, all right, I just lost one. I can't lose two in a row. Let me throw 3 extra contracts on that one, or let me throw some more money at it. Always start small. These are the things that I can't stress enough. Always start small in everything you test. And when I mean small, I mean demo, like free. Try it till it break it, right? Don't get greedy. I have a copier service, right? I have a service to where I make trades, my system makes trades, and people copy them. And we had somebody who just started 2 days ago and went from demo to live in that 2 days and lost some money. They lost some money because they're like, oh, I put the multiplier up too high. I wish I would have known. Well, you did know. In all the training that I give, I tell you, don't start out with a live account. Start out with demo. Make sure everything's connected. Make sure you run it for a week, 2 weeks, a month. Excuse me. Okay? And we talk about that process inside. Now, what I'm going to be showing you tonight is part of the Simply Forex family. And what Simply Forex means, simply, is that's it. I've learned how to trade by watching hundreds of thousands of videos, it feels like, of other people. And you get on their websites, you get on their systems, and they got support and resistance, they got Fibonacci's, they got Bollinger Bands, they got RSIs, and they got stochastics, and they got MACDs, and they got all these things, and the clock on the wall, and the whatever, the pendulum swings back and forth, and smiley. I don't know. They have so much stuff. It's not even funny. I once asked a person who is a competitor now, and at the time wasn't a competitor. In fact, at the time, I'd actually considered them somebody who was teaching me how to trade at the time, because I had no experience whatsoever when it came to binaries and trading and using MetaTrader 4. My way that I traded Forex when I first started, which is the foreign exchange, is that I took money in a box, okay, and took it into a bank. That was it. And then I came out with a different box of money from a different currency, and I went to another bank. It's basically what I did as a trader, okay, as a box trader. If that's what I got, I was coined that by a friend of mine overseas. This would be maybe a bank in Australia, and then I'd fly to Korea and go to South Korea and get the won, and then I'd go to, and I just went to place after place after place. Now, this type of trading was slow and inundating, of course. It was lucrative. I could make money, but sometimes I get stuck in a city for a week waiting for the exchange rates to change. Okay? Nowadays, everything's like, I can't even snap fast enough for what it is. But when I asked this person who was teaching me how to trade online, I said, man, these charts, they got so much stuff on it. Is there anything else that's out there? And is there anything like any basic way to learn how to trade? And just, it's just stuff so complicated. Is there anything? And listen, I'm no slouch when it comes into the figuring stuff out department, but this was pretty out there. And this person, I kid you not, I don't make this story up. It wouldn't be fair to that person because it was a crappy thing to say. But I was basically told, no, this keeps out the people that shouldn't be able to trade. And that to me is, I guess from his point of view, from his perspective, he's right. It keeps the people out who don't want to trade. But it also fuels, by mistake and money lost, those that think they can. I mean, if you could figure all that stuff out and you make a mistake, and you at least got something to blame, right? Maybe that's a crutch for a lot of people. What I found out is that I took the program that he was doing and he was showing, and I tried to remove some of the things that was in there. And I said, what are just the basic indicators to use? And he didn't have an answer for me. So I went out and found some. Now, when I went out and found some, I was in a mentality. I wanted to be able to trade only with a handful of things. Why? There's too many things, less is more. I boiled it down to one thing. The market's made of time and price. That's right. Time moves on and price moves up and down. Those two things, I can trade just with these two. You just give me a blank sheet, I'll trade. I'll look at price action. This is referred to as price action. Okay. Now, I'm not talking about just using candlesticks and dojis and things like that. I'm not opposed to using some indicator of market price value to go in, but I'm looking at a couple things. I'm looking at support and resistance. Okay. And I'm looking at a handful of other small things on a naked chart. Support and resistance, I can draw lines on it all day long. That's not an indicator. Okay. And I'm looking at price action, trend. I'm looking at trend, where the price has been, right? Is it an uptrend? Is it a downtrend? Or is it consolidating? Okay. So it's either up, it's down, or it's consolidating, which means bouncing in between two zones. So if that's the case, then how many things am I dealing with? I'm dealing with time and price. That's sort of the market itself. So I'm only really dealing with one thing, support and resistance, or two things, and trend. Now, how do I apply this to a good strategy? Well, every strategy should have something to this effect. This should be your foundation of every strategy you work with. If your strategy doesn't have this in mind, run the other way. Because you're trading a loophole. You're trading a game. Oh, yeah, every single system out there has trends, some sort of trend value, some sort of support and resistance. Whether you're using Fibonacci's, Bollinger Bands, moving averages, whatever. It's a type of support and resistance. So don't feel like it's something that is overly complicated to you. All right. So moving on. The concept of simply Forex is really the removal of all that extra crap. And in Simply Forex, we use one thing. We use a moving average. Now, what that moving average is and how to use it, it's all proprietary. It's all inside the system. You can go check it out. You can buy in and figure it all out. It's very easy. We help you through the process. But we wait for an event to happen called the crossover. When the crossover happens, depending on the trend and the direction and the value, we will say whether it's a buy or a sell or a buy. We put our stop losses and take profits at certain areas, and we let it do its thing. And if it hits our take profit, we make money. If we hit our stop loss, we lose money. Now, when we do this, we try to have it in what we call a risk to reward. When we set our stop losses and take profits, we try to keep this to a risk of 1 to a take profit of 2. Okay? This is a 1 to 2 risk reward ratio. That means for every dollar I risk, I want to be able to make 2. Right? So if I lose, I only lose, if I lose $10, but when I win 20. You see where this is going? That's a pretty good ratio. I'll play with that all day long. Now, if I lose 10 times in a row and I have a losing, if I only have a 20% success rate on my strategy, I'm not going to make much money. But I can have a 50% success rate, only winning half the times, and still win money. Pretty cool, right? So this whole process of the Simply Forex mentality really does us well because, again, we start there, but then we can add some small things in to make it even better, right? Now, the Simply Forex thing uses a moving average only, and as well as a support and resistance indicator. Now, this Dex support and resistance indicator is pretty powerful, and you'll see here inside in just a second. But it's that moving average coupled with the support and resistance that really make the strategy powerful. As well as the market starts to drop down, you're looking for what we call immersions, right? It comes up to a level, drops down, and it doesn't go back up. Maybe it goes back up just a little, but then it comes down to and it passes the lowest low that it's had in a certain period of time. And once it does, once it passes it, this is now a sell trade because now you want to go down. You put your stop loss at the top of the high of that previous, which I'll show you, and you trade that level. It's that simple. Simply Forex, right? Now, within the Simply Forex system, there is another process that we're putting together, and this process is called the Dex, B-O-L, okay, the Dex Bol. Now, what this is just a Dex Bollinger Band system. Like we were trading with the moving average and the support and resistance. Now we're trading with the Bollinger Bands and the moving, and the support and resistance. And I'll show you how that will all work in just a few seconds. Here we go. Clear all drawings. I'm going to add in a new share. We're going to grab onto, let's see, what should we do? Let's just do desktop. There we go. I test all kinds of bots and systems. So don't think I'm robber baron anybody else's stuff, because I buy everything. All right, so let's look down. We're just going to get into, I'm going to get a new chart window. Now, this is a completely, what we call the naked chart, okay? And this naked chart that you see on the screen right now is set at a minute 15. So that means all these bars are 15 minutes. Okay? So every bar that you see here, every candle is 15 minutes. Now, when it's blue, it means that it started at a level and closed higher than it opened. When it's red, it closed lower than it's open. This is called the bull bar. This is called the bear bar, right? That's where the bull and bears come from. Bulls being very aggressive and moving forward, bears being very reclusive and retracting, right? So it's just, they're both fighting a war. When people buy the commodity asset and it ends up higher in price, that's called a bull run, right? It's called basically the market's going bullish. When the market's overall going down, that's called a bearish market or bearish trend, okay? So every single one of these is a war. Now, on this process, there is a part of trading, okay, because all this is the market opens, it's just a price. We don't need to know what pips are or anything else. And in fact, this is really for those people that have a little bit more experience in trading than others. Excuse me. I'm going to zoom out just a little bit. Okay. And I'm going to begin to show you the process. And first, just real quickly, let me just discuss a little bit what we refer to. If each bar is a price, is a number, right? As it goes up in height and then time goes on, then it drops down a little bit, goes back up a little, comes back down. You can kind of see that war that's happening, right? Okay, it goes down a tremendous amount over a period of time. This is probably about 44 pips, okay? We call this a pip because it's basically another name for part of the price, right? And why it's called a pip, I'll show you here in a second. Okay, so as the number, if this is the Euro USD, 1, 2, okay, 1, 2, 3, 4, 1, 1, right? So there's 5 digits here, right? They use 5 digits here on the right. But really, you're just looking at these 4 digits here. This first number is referred to as the pip, okay? This one right here, or this fourth one right here. Okay, the fourth one in procession here is the pip. This, the fifth one, is called the unit. So if this moves to 1.2342, that's 1 pip, okay? If it moves to 2351, that's 10 pips. Got it? So that's basically the numberization of what we do here. We're looking to gain more pips. Now, how much this pip is worth really depends on how you buy it. And we're not going to go too far down that road. Just if you're following along now, you can follow along. As the price raises and decreases, you can see by these lines that I'm putting down that they hit certain levels. And we refer to these certain levels as support and resistance. Support being when it's down low and it's above the line and it bounces off of it, it gets supported to go back up. When it hits a level and is rejected, like these 3 or 4 bars are, this is called resistance and hammers back down. Now, this is happening right now by me just visualizing and seeing where these different levels are at. And this is not taking me too long. This is extremely easy for me because I've done it a lot. But I've also watched people who just started do this with the greatest of ease. This is really a really artistic value of looking at the level and just seeing a level where it's at. And that's it. If I wanted just to take, I won't say an unprofessional guess, I'll say a price action look, right, at the market. And I just wanted to kind of look, well, there's a level that I placed earlier from here, right? Because it's hit this level here. Because people are creatures of habit. They like to get to certain levels and the price rejects. Okay? Pushed up, came back down. Excuse me. Came back up and bounced off the same level that these did over here earlier. Right? So if that's the case, is this pair really likely to go back down? And the answer is yes. There's a pretty good chance that it would do so. More chance than it has than to go up. I'd say this would be a 30-70 split. 70% chance that it could be in that direction of down. So being on a 15-minute market, this could be easily a sell trade. And just by looking at the market, I can guesstimate that. Remember, I only have to be, if you use a R1 to 2, if you risk 10 pips and put 20 pips down here, and you do that every single time. If you come in and you say, I want to trade this, I'm going to come up 10 pips and put my stop loss so I can't lose any more money. And then I'm going to put a risk, I'm going to put a take profit down here about 20 pips. And you do that every time. What's the success rate you need to be to make money? 35%, 36%, somewhere in that area. Doesn't need to be much. But you have to be consistent in the value of how you trade that strategy. You have to have reasonings. Flipping a coin, there's too many opportunities for you to go 20% at one time. And with the same kind of concept you're dealing with, you could still lose either side of that. You could shift strategies, and next thing you know, you're trading the bad side of a bad strategy all the time. All right. So let me show you some things here real quickly, because I just placed these lines down here. I'm now going to show you something. Let me get another new chart. Let's see, chart window. This is the same Euro USD. Also, just before I do that, I did that on a 15-minute chart. I could also do this on an hour chart, and you wouldn't know any difference unless I just shifted the button, right? It's the same concept. Now, the lower the time frame, the faster the market moves. Okay? The faster the market moves. And the least amount of pips it's going to move in between the bars. The higher of the number, so if you get an H4 and D1 and day one and month one, the same amount of distance you go on one bar on a 15-minute, if we looked at like this move right here, this went 81 pips. But if I shoot over to an H1 and I do the same kind of thing, it's 122, 130, 140 pips, and the same amount of what it looks like the same movement. You see, it doesn't look very much different. You see, so the longer the time frame, the more movement it has, but the longer it takes. So I'm going to jump back down to the 15-minute time frame, and I'm going to pop on one of my indicator support and resistance right here. And hit my load value. SR, open, and okay. There we go. Now, what this program that I have for this indicator that I have for it, all those lines that I was placing all over the place before are done for me. And they're done so in such a way that the thicker the line, in some cases, the heavier the response is to that area. The different colors, the blue being almost immediate, this recent levels that it just hit, the purple being intradays that just happened today, and the thicker the line, the more times it's been hit in that day value. Okay, the more solid, the more reasoning is there for it to be kept as a highlight of support or resistance. Now, it doesn't matter what time frame I put this on, the lines will then repropagate and show me different levels for that time. And look how perfect it is. See how this one and this one just touch that line. Imagine if you came in, you found this line up here, it popped on, this is a level for us, okay? You can easily begin to start reading it very, very, very simply right off the bat. And just by looking at it, remember what we talked about before. This is on a 1-hour chart. Let me get that back down to a 15-minute. Remember what we talked about before is that support and resistance is a very strong indicator of a level that it's going to go to, whether it's breaking it or not. It's really about letting it do what it's going to do and then getting in on that position. And I'm going to show you what I mean here. This particular pair, even though that it came up and it bounced off there, broke through and came up, right? And then it went back down below. And then what happened? Broke through again. You see? Toppled over it. Even though that this line was here and was set here, it still kind of went against everything, right? And this maneuver is sometimes called stop hunting, right? Because if it came up and hit, and let's say you said, I'm going to go 20 pips up, and I'm just going to put my stop loss right here, okay? I'm just going to put my stop loss right there because that's a nice little safe zone. That's only 4 pips, right? But if I really wanted to, if I really should have done it right, okay, I should have put my take profit up 20 pips or 10 pips, right? Now, luckily, I wouldn't have gotten hit. I wouldn't gotten taken out here if it came up and did this. But maybe somebody did. That's probably why it went to where it went. Now, once it hit this double little top area here, the second time that it kind of came up, if it didn't break through and then it came back down and came underneath, the moment it hit right here and broke through that, let me scroll back here just again. The moment it broke this little M right here was the moment this became a supercell trade. And when that happened, I would put my stop loss all the way up to here and just let it continue on to ride as far down as I possibly can. Now, this would have been a trade that I would have taken, and I've taken 100 times, okay, this type of trade. I wait till these markets to hit, and I'll do it from the tops and the bottoms. It doesn't matter. But I'm just looking at the market. So adding this in has always been about the stretch being either overbought or oversold. I've used a MACD, I've used stochastic, and now I'm going to start using a Bollinger Band system, and I'm going to show you what that'll look like in here in just a second. Let me bring up this, clear out. Okay. Oh, yeah. Let me just get the Bollinger Bands on now. Stop it. Okay. So now the Bollinger Bands is nothing special. It is the same thing that just with every MetaTrader 4 comes out with. Do inserts, indicators. Oh, wait, trends, right? Bollinger Bands. Now, what I'm going to do is that I'm going to set the period for 20, and I'm going to set the deviations for 2. okay? And watch what happens. I'm going to set the line a little bit thicker so we can see it, okay? And yeah, I guess green will work. Darker green will work. Boom, okay? Now, I know you're looking at this, you're like, holy crap, Max, that's a lot of lines. That's a lot of creepy lines in there. But what I want you to look at is not so much how many lines it is right now, because it's a lot of lateral lines, but it's really only two things. And only a few things are physically happening. The idea of the Bollinger Bands is, it's basically the front is the mean, right? Or I'm sorry, the one in the middle is what we refer to as the mean. So we have a top sold and a bottom sold, okay? So, or oversold up top, or overbought and an oversold sort of in the bottom, almost like a stochastic kind of mentality, right? But what I'm trying to make it, overly simplifying this, but I just need you to see that this is the extension of the market, okay? This is the bottom of the market, and this is the middle. This is the mean, right? We always come back to the mean. My book is entitled, part of that, I should probably put that out there eventually sometime, that my book's called Returning to the Mean. Now, let's expand this out. Let's just actually come in a little bit. I mean, you begin to see that each and every time that we hit a level, let me get some drawing tools here so you can see. Once I start to find the relationship between both the support and resistance and the Bollinger Band, what I'm looking for are trades. The first thing I'm going to be looking for is trend, right? Because the information is already here. I already have all the information as far as the support and resistance and Bollinger Bands. So how do I spot trend? Well, first and foremost, I guess I could just come out a little bit and just look for it, right? If these lines are too thick for you, let me see if I can. Go to drawings, right click, I'm going to go to bands, go thin line, do something like that, right? That might be a little bit better, right? Because what we're looking for is make sure you get, there we go. What we're looking for is first is a consolidation, sort of like a squeezing of the Bollinger Bands, right? We're looking for this right there. That's the first thing. That's our first line of defense, or our first set of indication. Here's another one right here, okay? Now, how close? I'm usually looking for one bar going from the top all the way to the bottom in any time frame. I'm usually looking for that squeeze, right? Where if it gets really, really super tight, like you get all these little tiny little bars, then all of a sudden one bar can go from the top or within 2 bars from the top all the way to the bottom in that real quick zone. But I'm looking for this condension that happens here. And then I'm looking for the first big, thick support line. That's what I'm looking for, or resistance line, okay? Once that line gets hit, I'm looking for no closure over, and the first bar that, let me put this up here like that. The first bar that comes over and is rejected from that level, I'm looking at as that's the direction, right? So if that bar is the bull, I'm looking for a direction up. Now, how many pips was this? It wasn't a tremendous amount on the move, but what I'm looking for to do now is to simply, let me clear this out, is to simply go from here to the next level. That's all I'm looking for it to do. Some people say take it out to, the top of the Bollinger Band. So that might have been there. That might have been 14 pips, might have been 15 pips. I'm looking for that and that first level. If I hit that first level, I'm then going to move my stop loss. So as soon as I get into the trade, I'm coming down to a certain level. Now, what that is, I could use this level of 29 pips, but I'm not. What I'm going to do is that wherever I see that I want to get to, if I can see where my take profit is, I'm going to do half of a support of a stop loss, right? So if it's 26 pips here, I'm looking at 13 pips here, right? Because remember, I'm trying to keep 1 to 2, all right? A 2-to-1 ratio like that. For every 1 pip I risk, I want to make at least 2, right? And I'm going to set it there. if I set it there, now what I'm doing is I'm allowing the stop loss. Let's just set this line here. Let's just say that's the stop loss right there, that purple line. Okay. And our take profit is right here at this red line. Now, as this goes past the mean, the moment it touches the mean, right, I do something called chase the money. And what I do is that I move that up I move that in to just above break even. And there's a reason why. I do that because now I'm in a different ball game. I know. I just took that out and scratched my back on a live webinar. Hey, listen, I don't mind being real. I'm a real dude. All right. I'm not some prim and proper guy that's sitting here just trying to have you buy stuff from me. I'm trying to teach you something that it's made me a lot of money, and this is my life. Right. So what I do, as soon as it hits the mean, as soon as it gets back into the mean again, once it's produced there, sometimes it might hit the mean right away. Don't worry about it. All right. What we're looking to do is to create an effect here that once it does move and hit the mean, this is telling me, hey, it's moving forward. Okay. I then wait for it to either penetrate or just touch the top band. Once I do that, once that happens, I then move my stop loss up to the mean. Now I've secured this pippage, whatever that is, 10 pips. Again, this isn't a lot of money we're talking about, right? If you bought it at a micro lot, that would only been $1 you just made. Okay. You're risking 13, or let's say $1.30 to make $2.60. If you do a mini lot, that would have been risking 13 to make 26. And if it was a standard lot, you would have been risking 130 to make 260. But you're only doing that if your bank balance is like $50,000 or $5,000. Okay. So I do it in this process because I find deals all day long that do this type of thing. Now watch what happens. Here we go. Now this one didn't really, we get to so the market's been squeezing pretty hard there. Get a readjustment, start to squeeze a little bit in here, but we don't see this. We don't see this happen, right? Because it really didn't get out to and hit a mark for me, right? Even though you could have gotten to this point where it's gotten up to that point, you could have done some stuff in there. But if you didn't see that, if you didn't know what was there, because you can't really see anything to the right, right? Anything to the right of my cursor right now, you wouldn't have been able to see because we're trying to track real time here. Right? Just because it drops right there doesn't mean you would have gotten into a trade. Could you have? Yes, you could have. You could have set the support, the stop loss back at this level, but then you needed to really move. You needed to hit 60 pips, right? So if you set this out, if you got into this trade, your next level down was set right here, 14 pips. So your stop loss would have only been like 3.5, 6, or 5 or 6 pips. What you're trying to do is to find an obvious level of consolidation. Boom. Here's an obvious level of consolidation, but it doesn't really hit the level. In fact, you barely see it touch the top side of that line, that overbought area, right? Crosses over the mean, gets to the other side. That's basically it. We're still looking for, here's some more consolidation. It's right at another level. Some more consolidation, bounces off, comes back up, hits the mean, right? You're starting to see this now. We use a stop loss. We use whatever this is up to here. That's 28 pips. I come down 14 pips. I put my stop loss right there. Comes up, hits the mean. Where does that? Where do I go now? I come up to wherever I got in at. Pop it to right there. Now I don't get touched out. Okay, pops in, grabs it. It may get touched out by this one if I moved it up to where I got in. Yeah. Again, I would have got stopped right out there at 0, but I didn't lose any money. Pretty crazy, right? Now, if I didn't get a chance to move it up there once it gets through the mean, because I really don't, it's to right there. Once it really does close on the mean, you can move it up to the mean once it gets to the top level. I mean, that's what we do. Well, once it gets to the mean, you move it up to where you got in, which could have been, yeah, right there. You would moved up right there. So you would have broke even, and that's okay. And now we're doing a little bit of consolidation here. We're sort of getting back into an uptrend, right? because we broke this higher level right here. So we broke it right here. And look what happened. As we broke the level, we came back to the level, which is a good understanding that if we're consolidating again, where are we going with this? Something else you could do real quickly is you could take an indicator of the trend. You can put a moving average on, and you can create a 200 moving average. This is an overall long period trend on a simple, and you could look at this. And we're reporting back up again. So what would you do here? How would you get into a trade like this? Well, on something like this, it's starting to consolidate. I would look for some interjection or some immersion. I would look for it to come up, past an area, to get to an area. I would look for this support area seems to be very strong, right? If it breaks this area, we know we're in trouble. So if I wanted to take a gamble, if I wanted to take that opportunity, I would simply, to make sure I'm not on a live account, I would simply hit F9. I would get into the market as a buy. I would take my stop loss. I would put it down right around that level right there. This market here is 16 pips. I then come up and look for 32 pips right about there. Oh, a little bit further. Yeah, a little lower, right about there. Okay, and that's my trade. And that's it. Now, I know that in this particular process, we talked about moving up when it comes to the mean and stuff. But if in the way that we're trading this, we're trading it as a bounce with a consolidation, right? Off the consolidation, it's still going upwards, right? So in something like this, we're not using this to come back to the mean. Even though that if it comes back down and bounces off, we're hoping that it's going to bounce off of this area and end up and finish up in this area, okay? So this is a speculation trade with Bollinger Bands. But because we can trade it either way, look at the consolidation here. What would be your trigger here? Well, you want it to bounce off a level. But maybe your consolidation is, hey, it's past the mean. Let me get into the trade there. I'll put my stop loss really tight, 12 pips. I only need to make 24 pips. There it is. This is a winner here, if you were to use that mentality. Whatever mentality you use it consistently through everything. If you wait for consolidation to happen and then reinjection to the mean after it's punched off of the top level, and that's the direction you go for it for a little bit, and you let it do its thing, right? You let it get to a level or let it return back over the mean and say, all right, I'm out. There's 15 pips. Get what I'm saying? So on something like this, where would your stop loss go? Well, if you use that kind of mentality, keep it close to the Bollinger Bands. Keep it close to support and resistance. Don't put something all the way up here. We're going, I wanted to give it wiggle room. No, you wanted to give it more losing room. All right. So how does this Dex Bol system really work overall? This is the tough part. You can only allow this to interject into your trading life if this is the only thing you're going to be doing. That sounds very selfish of me, doesn't it? But it's not really. This system can only work as well as you do it to a T. That means no going, well, I see you have a Bollinger Band and this system and that system, and let me throw my stochastic on here. Let me throw this on there. Let me throw all these things on here. If I add my 60% success one and this 50% success one, then I should have this percentage. Yeah, no. The buying power here is, the trick is, okay, there is no trick. It's just consistency. Do the same consistent thing each time. Find your levels of buying. Know when to get in and out. Simple, right? There we go. I wasn't looking to get too much. I'm going to get out of that trade right there. Now I got into that for a mini lot. I mean, I could have stayed in and let it keep going and doing its thing. Okay, but my point's proven. The idea here is to find your ideas, your trade ideas within the realm of reality, I guess, is just to know that, hey, I'm looking for like super consolidation. Now, is your version of consolidation, does it look like this? Which really tiny, gets a little throated right there? No. That's not it. It has to be very, very sincere, right? You're looking for real big chokes here. You see? So how long did you have to wait for something to this effect? Well, this may have happened on a Sunday or a Saturday, and the levels weren't pronounced, but this is just one pair. Throw this on another pair and see if you can find something happening then. There's how many pairs are there? Yeah. You see what I'm saying? But you really do want to get down to just trading one or two pairs that work well with this process. Euro USD does work well with it. And look at the consolidation that happens. Once you get this point and it makes its move, bounces down here, gets off of this level, railroad tracks back up, gets back into the Bollinger Band area. This is a definitely sell signal. And if you get to this point, your take profit or your stop loss really only is going down here. That's only 10 pips. So you need to make 20. There you go. 21. Boom. Done. And not too long. A couple of hours. Done. Now, do you get out of the trade then? Well, you could. You know, if you moved your stop loss up and you just kept on moving it up, kept on moving, keeping it back just a little, yeah, you would have got stopped out by a big jumping candle. Could you have made more if you got out up here? Yeah, absolutely. But the fact is that if you stay consistent in your buying and how you get in and how you warrant it, great. If later on that availability of the risk of that trade, you don't lose anything, but yet you don't gain anything, no harm, no foul. Because what you're looking to do is to limit your risk and to maximize your reward. And you do that with every once in a while of getting a super run trade. And this is where the money's made. The money's not made. You're just trying to protect yourself in the market when you get in. Find a reason to get in and protect yourself with it, and then watch the market well enough to be able to get into something super good that will end up yielding you 60, 70, 80, 100. You know, there's 111 pips right there on a move that if you see the consistency, look, Bollinger Bands comes back over the moving average. This is another part of the strategy. Okay, you learn all this stuff inside. When it comes back over, when the whole thing, the mean and everything comes back over right here, this is buying power. Okay, stop loss comes up, stays up here. That's only 11 pips. You then market trend this thing all the way down to each and every level that it hits. Okay, every single one of these top outs is a level. Then you start putting your stop loss all the way down. You take it to right about there. And that's a 78 pip move, 79 pip move. You would have gotten stopped out right around in this area. Unless you just stayed right here up in this area. But, you know, now we're just looking at the market and trading, right? A lot of people do that. Another consolidation right here. Now, we don't know what happened past this side. But if I would have gotten in, I would have gotten in right here. Stop loss right above my market, 11. That's 11 pips. I'm looking for 22 pips. Boom, right there. Gotten it, out of the trade. Market reverses, comes back on, closes the other side. Now, I don't think I would have done a reverse trade here because there's not enough indicators for me, other than the little bit of consolidation that happens here, and it penetrates that market. It would have been flat. I don't think I would have just been a guess either one way. Right? I can't say, all right, well, then look at the system. Look, it went and did this. It wouldn't have. I don't think I would have gotten in. But I just made 79 pips, so I'm pretty happy. So it's all good. All right. So these are the few things that you're working with. This is a recap. You're working with the Dex support and resistance. You can get over at dextrader.com. Okay. Buy into the program. It's very inexpensive. Forex side, very inexpensive. Get in and get trained, get learning. Learn the Simply Forex side so you can learn all the indicators, learn all this stuff. I'll have an exclusive process for all of you on board to be able to see this Bollinger Band strategy process and see it fully traded constantly. It's very, very powerful. All right. Well, that's basically it. Don't want to take too much more of your time. We consolidated just about all of our websites into one site, the dextrader.com site. And there's still more stuff to come. We got bots, we got EAs, we have copier systems. We have all this great stuff. Boy, I'm so excited because it is just a pleasure to finally get everything into one major house and just work it. Just work that one simple thing. It's only me and a handful of other people in here that are actually doing all this work to keep all this stuff going. And with all these people on board, it is incredible. I hope to see you inside. My name is Max Farrow. This is DexTrader.com. And as always, trade well.